We move on to the U.S., where the stock index futures pointed to a lower open as investors digested elections in Germany and eyed new regulations on health care in the U.S. President Trump tweeted on Sunday evening that Alaska, Arizona, Maine, Kentucky would be big winners under the Graham-Cassidy bill to repeal and replace Obamacare. Looking at those futures numbers there, Dow Jones Industrial Average down 0.07%, S&P 500 down 0.08%, and Nasdaq looking down 0.11%. In Asia, major indices were mixed today, with a broad index of Asia-Pacific shares recording a moderate decline as investors digested elections in Germany and New Zealand over the weekend. Japan's Nikkei 225 rose 0.5%. Across the Korean Strait, the Kospi reversed early gains to slide 0.35%, falling for the fifth straight session. The benchmark index finished the session at 2,380 points. The Australian ASX 200 paired gains to finish the session 0.03% higher, with the healthcare sub-index leading gains. Greater China markets traded lower across the board. Hong Kong's Hang Seng Index declined 1.41%. The Shanghai Composite shared 0.35%, and the Shenzhen Composite sank 1.242%. And to other markets issues here in Africa, shares in Tullow Oil PLC rose more than 8% after the Africa-focused oil explorer says it expects to resume drilling at its multi-billion-dollar TN deepwater oil and gas project after a court ruling favored Ghana in an ocean border dispute with Côte d'Ivoire. The International Tribunal for the Law of the Sea on Saturday drew an ocean boundary favoring Ghana, ending the dispute which has slowed the development of oil fields and at times soured relations between the two oil-producing nations. Tullow, which leads the TN project, now expects to increase output from around 50,000 barrels per day to 80,000 barrels per day. Tullow shares were up 6% at 189 pence, having earlier hit a four-month high of 192 pence. New laws and a crackdown on mining firms in Tanzania has slowed fresh investment in what has long been seen as one of Africa's brightest mining prospects as companies assess the consequences of government efforts to claim a bigger slice of the pie. Takeover bids and exploration plans have been cancelled and workers laid off. The share prices of many firms listed in Australia, Britain, South Africa and Canada with interest in Tanzania have halved as the value of their investments tumble. The tumult follows the passage of 3 laws in July that, among other things, hiked taxes on mineral exports, mandate a higher government stake in some mining operations, and forced the construction of local smelters to bring Tanzania higher up the mining food chain. Iran's oil minister Bijan Namada Zangani says OPEC's commitment to cutting production to clear global glut is working, but the group needs to address rising output from Libya and Nigeria. OPEC and other global producers, including Russia, agreed to maintain output cuts through March to end a price rout that has battered their economies since 2014. Iran was part of the deal reached last year, though it was given special permission to raise output by 90,000 barrels a day. Libya and Nigeria were not part of the deal and have since increased production, complicating the efforts of the suppliers to reduce the glut. And back here, the Nigerian fixed income market, the Debt Management Office will offer bonds worth 135 billion naira this week, all in reopening. Now, the market is also in the wait-and-see mode as the Monetary Policy Committee begins its 2-day rate decisions meeting. Let's talk to a dealer with Citibank, Sheon Ame. Good afternoon, Sheon. Thank you very much for joining us on the program.
Good afternoon.
So tell me, what sentiment is there in the market as the MPC meeting begins today?
Can you repeat your question?
What sentiment have you observed in the market today as the MPC begins its meetings today?
Oh, okay. The market has been kind of cautious at the moment. Most analysts expect the MPC to hold rates, and some of them saying they may cut rates. But nevertheless, it's been a cautious mood in the market today, really. Not much going through.
Now, looking at the week that has just started, and of course the DMO coming up to the market for bond offer this week, what are your expectations in terms of liquidity?
Well, the market is tight at the moment, really. But the confidence we are having in the higher new window, and also interest from institutional investors is supporting the asset prices in the fixed income market. So really, it's going to be an interesting week for MPC and the auction, and I think it's going to be eventful.
All right. Thank you very much, Sean, for your time. We look forward to hearing from the CBN governor. That's tomorrow after the meeting. The Democratic Republic of Congo may become the major supplier of cobalt to Germany's Volkswagen as the automaker accelerates its ambitious shift to electric cars. The Democratic Republic of Congo produces roughly 65% of global cobalt supplies, estimated at around 100,000 tons this year. Canada, China, Russia, Australia, and Zambia are also major sources. The world's largest automaker, Volkswagen, has asked producers to submit proposals on supplying the material, a vital component of rechargeable batteries, for up to 10 years from 2019. Volkswagen, which decided on the strategic shift to electric vehicles after it was engulfed in the Dieselgate scandal, plans to invest more than 20 billion euros in zero-emission vehicles by 2030 to challenge pioneer Tesla in creating a mass market. The company, which aims to make up to 3 million electric vehicles a year by 2025, wants all the cobalt tender proposals submitted by the end of September.